Good morning, everybody. I'm back in black, back in Boston again. I was out in California for a couple of days. Went to my 40th high school reunion. It was really had a great time. Great to be with all of you today. It's September 8th, 2025. Time for a Daily Bites. We talk about the markets, talk about the economy, talk about Fed, maybe other things that may rise here that could shake up markets. So let's take a look at the futures market over here. So far, so good. If you're bullish, up 12 handles. NASDAQ up about 74, Dow Industrials up about 70, getting off to a little bit of a good start this morning. No real big news over the weekend to shake and stir markets, but of course we do have some data coming out this week. Don't forget the inflation reports are coming out Wednesday and Thursday. PPI on Wednesday, Thursday morning before the open. We'll have the CPI number for August. And as you recall, last month, the July figure for PPI was a little bit hot, a little bit on the hot side. The CPI number was slightly hot, but mostly in line with what was expected. So we'll see what happens with that. We do have a Fed meeting coming out next week, starting next Tuesday and Wednesday. Starting Tuesday, finishing up on Wednesday with a monetary policy decision, and then a press conference by Chair Powell. So it's going to be an interesting couple of weeks. This week we have some earnings reports coming out, not too big. I know Oracle is going to be out on Tuesday after the close. Chewy comes out in the morning on Wednesday, Adobe later in the week, on Thursday afternoon after the close. So a couple of those names, a couple of names as well too that I'll be looking at. So what are we seeing in the markets right now? Well, jobs report came out last Friday, and it was rather weak. And the assumption that the market was making on Friday, with it going up and then coming back down, is that the economy is starting to get a little bit weak, and we're going to need some stimulus in the way of monetary policy. And what are we talking about? We're talking about rate cuts, right? So the Fed is going to look at this information and make an assessment on whether they should be cutting interest rates. Well, we can see what the market is interpreting as the data and how they feel about where Fed policy should be. And the chart I'm showing you here is the 2-year yield. And oftentimes a 2-year yield kind of projects what the Fed policy is going to look like a couple of years down the road. And you can see here a huge drop. This is yield now. This is a huge drop in yield in the month of August. Big drop here in the end of July, beginning of August. And then we followed through to the downside and nearly tagged, excuse me, the April lows here last week, 3.52% on the 2-year. Now we did see a rise in bonds on the 5-year, the 7, the 10, the 20, and the 30-year across the curve. Bond prices went up, yields went down across the curve. We did see as well too some interest in the Fed Fund futures. So the Fed Fund futures market also went up, and the probability also rose that the Fed is going to cut in September. So now we're seeing just about 100% chance of a cut, at least one cut, 25 basis point cut next week. There's a 10% probability based on the futures market here that there will be a double cut, 50 basis points. Now, if we go to October, which was about 50-50 recently, it is now sitting at about 80% chance, 82% chance of a cut at the October meeting. Seeing as if we only get one cut in September, and then December is actually pricing in a third cut as well too. So the committee will come out with projections after this meeting is out next week. So we'll be able to see what their economists and what their forecasts are and what they're thinking about monetary policy going forward, along with GDP, inflation, and unemployment. So last week was a pretty good week for our portfolio. We had a strong week. Show you what that looks like, if you don't mind. The portfolio was up 1.95%. The S&P 500 is only at 0.32. putting our year-to-date 44.59%, 44.5%. We were above last year. We were at 41% almost last year, well above what the S&P 500 has done net, about 34%. Great performance, but we're up 85 when the S&P's up 34. So we're more than doubling what the S&P 500 is on a rolling 2-year basis. So very happy about that. We have some positions still on right now. Let's see. I don't know. Not a whole heck of a lot to do today, other than just watch and observe. Manage your risk, manage your portfolios, take some risk off the table. If you've got some puts on, like I do, they're going to get hammered a little bit today. I may take them off, may lift them, or may sell some puts underneath it. I don't know, something like that. And we just need to just be patient here. This is a time where we don't need to do too much, because if we do too much, we're going to get into a lot of trouble, right? There's going to be plenty of time and plenty of interest later on this month, I suspect. With Yom Kippur and Rosh Hashanah first, of course, Yom Kippur coming later on, we're going to see trading starting to slow down a bit during that 10-day holiday, and once that happens, you can see a little bit of more erratic price movements, and we'll also see some volatility rising. We do have the S&P futures are going to roll into December this week, and next you're going to see a lot more trading into the December futures, and we'll see. It'll be interesting to see how that looks starting next week. But by and large, you really don't need to be doing a whole heck of a lot here. Again, if you have some profits on some stuff, by all means, take some profits. Don't have your hands tied behind your back if we're ready to do some selling. Okay, nobody ever went broke taking a profit. Watch Mad Money either today or tomorrow. I'm not sure. I think it might be tomorrow. Off the Charts is going to be on Jim Cramer's going to be featuring my charts on one of those 2 days, either today or tomorrow. So keep an eye on that. And I think it's going to be it, everyone. Not too much to talk about today. Thankfully, nothing bad. And so we'll just kind of just play things as they are. Just move slowly through your trading. If you see some opportunities, go ahead and grab them. And if you're in the chat room, I will see you there a little bit later on today. Take care, everyone. Have a great day. Appreciate all you spending a little time with me.